Leo will be watching Woolworths once again today for an announcement around its property portfolio.
Kate, it's a little bit disappointing that we seem to have heard most of the details being leaked through media rather than from an announcement from the company. In fact, the Australian Financial Review today with a few more details talking about a $500 million capital raising for that property vehicle. There's been speculation since Tuesday that we could see 70 properties rolled into one vehicle worth about $1.4 billion. And as part of that, we'll see a capital raising of about $500 million to really de-gear and reduce the gearing levels in that property vehicle. Now, the AFR talking about a yield of about 7.5% to 9% for this vehicle. It looks like Citigroup is going to be the sole underwriter, and it looks like Commonwealth Bank as well as Morgan Stanley have the co-manager roles on the retail component of this. We haven't heard anything from Woolworths as yet. If we have a look at how the shares have performed since media reports started surfacing on Tuesday, we've seen Woolworths shares up by 1.4%, and that's compared to Wesfarmers, which is up by about 1%. If we have a look at how this may impact on shareholders, I guess it's a reshuffling of its assets that may free up about $750 million worth of capital. So the market's going to be watching very closely to see whether Woolworths has additional growth plans with that capital which will be released, or whether we will see some sort of capital management for shareholders. So watching Woolworths very carefully, expecting to hear an announcement soon. Most of the details have been leaked by the media since Tuesday, but increasing speculation around a spin-off of 70 of its Australian and New Zealand properties into a separate property vehicle.
And Julia, we've got Billabong back online today. What are we expecting to see here? Of course, yesterday there was plenty of talk around the fact that we saw reports in the Australian Financial Review that the private equity firm that's made a bid for the company was going to drop that bid. That, in fact, isn't correct. Billabong's come out to dispute that fact. However, it does sound like things aren't all well, doesn't it?
I think we will see some of that takeover premium remain out of the shares. And we did see the shares dropping around about 18% yesterday on expectations that perhaps we could see TPG pulling out of its $1.45 bid. Now, we saw the shares finishing at $1.07.5 yesterday. We could see it make a little bit of a comeback today, but I don't think it's going to get back to the levels that we saw early yesterday morning. And that's because while Woolworths has come out to say that TPG is still in bid talks, that it does have concerns, and that's going to put a smaller probability on this takeover going through. Of course, this comes after Bain Capital pulled out of its bid, and the fact that we've seen two private equity companies looking at Billabong running the rule, and we've seen one of those private equity companies pulling out of the race is a negative, because private equity companies tend to have similar hurdles when evaluating businesses, and also similar ways of looking at valuations. So I guess a bit of nerves around this TPG bid. Of course, originally the bid was at $3.30 back in February. It was reduced down to $1.45 after a $225 million capital raising and profit downgrades coming through from Billabong. So no doubt that jitters will remain in the stock, but yesterday's tumble 18%. We'll probably see a little bit of a rise for Billabong, but we're not going to see it getting back to the levels that we saw yesterday morning.
And Julia, it's been a pretty quiet week. Let's just check in with the big miners. How have they gone on balance this week?
Well, the miners have been the underperformers of the week. We've seen some of the defensive areas as well as the material space underperforming. So the healthcare space, the telecom space and the material space have been the three underperforming areas. But altogether, while it's been a quiet week, it's been a good week for the Australian share market. I've just got the ASX 200 behind me, and this is the 4 days of trade that we've seen this week. It's a rise of 1.5%. We've seen the Australian share market reach the highest level that we've seen in 14 months. In fact, if we have a look at the last 5 weeks of trade, 4 of those weeks have been higher, and if we do see a gain today, that marks the 7th consecutive day of gains for the Australian share market. The good news this week is that every single sector actually traded higher, so we've seen gains all across the board. The best sectors, though, were the interest rate sensitive ones, and that's after the Reserve Bank cut interest rates here in Australia. We saw the property space up by 3.2%, the financial space gaining 2.4%, and the discretionary space making a comeback up by 2.9%. In terms of individual stocks, a lot of the big movements were dictated by takeover speculation, takeover talk, or potential bids. We saw Arium up by 37%. APN Media also doing well on speculation that it could make a sale of its New Zealand business, so that stock up by 24%. But of course, Billabong are down by 19% on speculation that we could see TPG leaving.